Crypto has a bloodbath as Terra and Luna disintegrate, wiping out $50 billion of market cap. Bitcoin and Ethereum see massive liquidations, and altcoins get trashed. Volatility explodes on demand for crash protection, and skew hits May 2021 extremes, signaling a short-term low might be in. All this and more in this week's Crypto Insight. So crypto this week, obviously, we had a bit of a bloodbath led by the collapse of Terra and Luna, and we saw Bitcoin trade as low as 25K last week. So, when we spoke last week, obviously Terra was coming under a bit of pressure. The peg was being tested, but it hadn't completely failed. But then within a day or two, it was game over, right? And the whole space got wiped out. About $50 billion worth of market cap went to zero. Pretty brutal, right? The crypto market doesn't take any prisoners, obviously. Now, the panic kind of escalated, obviously, after Terra was unable to recover from that initial break. They liquidated all of their Bitcoin reserves in an attempt to stabilize, failed, couldn't manage it. And then you started to see Tether come under pressure, right? So people were worried that, okay, one peg's gone, let's move on to the next peg that we think might be weak, might not be holding all the collateral that they say they are. Let's go after it, right? So basically, Tether got attacked. The peg did go away from one. It got down to the low 90s. But then you had a load of redemptions, in the billions, basically, showing that, they could redeem. They had money backing them, and then it recovered, basically, right? So that was a big sigh of relief for the whole market. And things kind of bounced from there, right? And the kind of worst of it was kind of over. We don't know if it's over fully, but for now it's over. From a technical perspective, obviously we've been talking about this breakdown kind of in progress. First sort of target was 29K, got broken. Now that we've kind of had that really large impulsive move down to 25 and now we're bouncing, the kind of shape of this thing to me suggests that this leg that started here in end of March is carving out a 5-wave sort of sequence. So we had the 1, we had the 2, that big down leg was the 3. We are now carving out a 4 of some kind that I suspect will either reach exhaustion at 33K or maybe as far as 38K. But that's kind of, and it might take a while, right? It might take a few weeks or whatever. But then once that consolidation is over, then you're going to see another retest of the lows and maybe break those lows in a 5th wave. Where we ultimately reach our bottom target, wherever that may be. Kind of an obvious target would probably be 20K as a minimum. Problem with that is if 20K gets tested, does that create a whole load more liquidation? Are there a bunch of whales who are going to get taken out? I don't know what the deal is with MicroStrategy. They claim that they've got no issues until 3,500 on Bitcoin. Seems a bit surprising given how much they bought, and given that I think they've taken out a fair amount of debt. But yeah, I haven't crunched all the numbers, so I can't agree or deny what they're saying. Basically, all I know is though there's going to be a fair amount of panic down at 20K, I suspect, and liquidity will deteriorate as we go down there as well. We're seeing open interest already coming down on the CME, for example, and things like that. So where a lot of US institutional players were playing in the CME to express views on Bitcoin, open interest has kind of collapsed there, right? So that's not great for liquidity in general. Anyway, but like I say, right now, not doom and gloom, probably in a bit of a upward market for at least a week or two. That's the scenario. That's my base case. Looking for this market to push up to 33, at which point I'll probably start re-entering hedges. That's kind of how I see it. Then if we have a look at, obviously I mentioned, right, the stable coins were not so stable, right? So Terra's obviously gone to zero. Tether seems to be surviving. Problem with all these stable coins is that it's kind of given regulators an excuse to get more vocal on stable coins and the risks that they pose to the financial system, right? So kind of gives the establishment an argument to basically try and put more hurdles and more restrictions up. Okay, but and it might stop some institutional investors coming into the space, right? They might think twice about it, given that the tokens that were in the top 10 in market cap can get wiped out in 2 days. That can be quite scary for some people, basically, right? Certainly for people who are running money and other people's money because they're running it in funds. The idea that you could wipe out other people's money if you go into the wrong coins and stuff that's quite scary, I think, for a lot of asset managers, right? So it's definitely not a good thing for the space overall. Yeah, but at least Tether was able to stand up to scrutiny. There was some switching out of Tether and into USDC because that's deemed to be like the best in class stable coin, the more legit stable coin, audited, collateral. People kind of feel a lot more safe about that one, right? So that one even traded at a slight premium, I believe. Yeah. So that's kind of the story on stables. If we look at Ethereum, obviously kind of tracking what was going on in space, it had been holding up really well relative to Bitcoin, right? We'd been mentioning the ETH Bitcoin cross. Even as Bitcoin was selling off, that thing was actually trading slightly up. That didn't last, right? This obviously the recent outperformance on a mass panic, ETH kind of remembers that it's got some beta, Bitcoin dominance reemerges, and ETH went as low as 1,700, right? Which is a pretty brutal move. Okay, it bounced off that level. That was a key support level. It did bounce off it pretty strongly, but the fact that it even got down there was pretty brutal, right? If you look at the spread, it had a big move down from 0.078 down to 0.067-ish. It's kind of stabilized here. Big support on that is probably about 0.064. So it hasn't broken down that level, which means, it's the kind of the longer term view is probably still intact. So nothing to worry about in terms of that relative view, right? If that's your longer term view. But that's not to say, if Bitcoin goes lower to 20K and beyond, then there's no reason why ETH can't get as low as 1,500, right? Or even 1,300. So you definitely want to be careful on outright longs on this stuff. Yeah. Especially if you agree with me and you don't think the global macro sell-off is over. I think equities have still got a lot more downside than this stuff is not going to escape that. Yeah. The other thing obviously is going to be alts. Alts took a beating. Obviously Ethereum underperformed Bitcoin, but then the other alts underperformed even worse. So you had the likes of Solana and AVAX down about 50% at their lows on the week. They did bounce strongly, but still down 50% in a week is pretty nuts. Obviously, Luna got completely wiped out. Other tokens such as Phantom, Polygon, Cosmos, things like that all took big hits. One thing that's interesting is that perpetual funding rates in Bitcoin and Ethereum have actually held up and are still positive, whereas the alts remain negative due to the immense selling pressure that we saw in alts, right? So there's a bit of a divergence there between the large caps, the flight to quality cryptos, Bitcoin and Ethereum, and some of those other cryptos, right? So those negative funding rates show that there's a bit of a short base in those altcoins, which, if things are okay and Bitcoin can grind its way up, you might see a bit more of a short covering rally coming out of the likes of Solana. Right now, I think Solana's at around 57. Yeah, you can see here. Says at 57. These are the big resistances that I see in a bounce: 75, 82, and 94. To be fair, if it can get back up to 80, it's doing pretty well, right? So I think it's got a chance. If things stay okay for a week or two, this thing could maybe bounce back towards or between those two first resistances. But yeah, then it's probably time to take any chips off the table and look to the downside again, I would have thought. Yeah. All right. That's kind of my quick roundup of price action charts in crypto. I'll hand over to Aaron.
All right, so we're going to do things slightly different for on-chain this week. Glassnode came out with some pretty interesting stuff where they dug into the Luna and the UST kind of blow up. You'll hear some similar things that Imran mentioned, and then on the next page, on the next slide, we'll go to the Bitcoin specific stuff from Glassnode and a little bit from Will Clement. Clement had some similar things to say as Glassnode, some similar graphs, so mostly from Glassnode, but we did feature a little bit of both of them. So starting out here for the graph on the top left, it's basically a visualization of what exactly went down in UST and Luna. We saw that implosion of 40 billion, maybe 50 billion in market cap kind of disappear in just a few days. And the reason for that was this sort of guaranteed peg that UST and Luna had, where one UST was guaranteed to equal $1 in Luna. And so when things hit the fan, they became depegged. People were redeeming the UST for Luna. You basically got what happened in the top left, where, let's see, 18 billion of supply in Luna went all the way up to 11.2 billion, sorry, down to 11.2 billion, which just super hyper inflated the Luna supply, going from only 343 million to over 6.53 trillion. And that really that's why Luna, what it looks like what it looks like now, kind of just dust fractions up for a penny. So from there, if we go to the top right, you can get a visualization of what LFG, the Luna Foundation Guard, was doing to kind of backstop to reserve their stable coin. And that was building up a large reserve of Bitcoin. You can see that that Bitcoin total reached about 80,000 coins, worth just under 3.3 billion before things kind of went sideways. But in just 24 hours from May 9th to 10th, they sold off all of those coins back into the market, except for, I think they said 313 coins were left in a recent tweet they put out yesterday. And so from there, that kind of caused a little bit of contagion throughout crypto in general, but specifically throughout stable coins. And that's what we're kind of looking at with this green chart in the bottom left, where we're looking at Tether. And so, like Imran mentioned, Tether started to get under some pressure, started to wobble, which is a much bigger deal, as their market cap's like 83 billion versus UST was 21 billion. So getting some shakiness there could be a little more systemic. So when UST hit the fan, we saw Tether did depeg. It got down to about 95 cents, I believe, where you had over $7 billion worth of Tether redeemed within the last week. And so when you had that depegging getting down to 95 cents, it did seem like a lot of that flow ended up going into USDC, which we can see from the blue chart. A little over 2.6 billion worth of USDC flowed in while Tether was getting hit, causing some people to wonder whether the transition from Tether to USDC might be taking place as the preferred stablecoin. USDC is considered safer by a lot of people because it's backed by a company called Circle. They're regulated, they're audited. I think they're a licensed money transmitter in the US, so their coin is deemed a little more legit by some. And so moving on from there, onto the specifics of Bitcoin, starting in the top left, we can see that the exchanges for Bitcoin saw a huge influx, which you can imagine was because of Luna and the LFG pumping in their coins, but they put in about 80,000 coins, and the exchanges reached up to 88,000. So Glassnode was saying that was probably roughly 8,000 worth of coins of kind of panic sellers. They backed up their call for panic sellers with this chart on the right, which is showing you realized loss across the market. And basically the red showing previous realized loss, and the net realized loss for this kind of capitulation was 2.5 billion for 2 consecutive days. So it is in line with previous capitulation events that have kind of marked some bottoms. And then from there, we're borrowing a chart from Will Clement, even though Glassnode did have their own similar one, which is looking at Bitcoin's realized price, which the realized price of Bitcoins was when you take the sum of value for all the coins, the last time they moved, and you divide it by the circulating supply. And so that line, which is kind of shown by this bright green line here on the chart, it's usually kind of treated like a bit of a holy grail in Bitcoin and in technical analysis in terms of people charting and marking opportunities to buy. It's often kind of correlated with end of bear markets. So, it just recently got down to 24,000, just under 24,000, I think specifically. So some people like Will Clement are calling it out as extreme value or generational buying opportunities if we do continue down to that kind of area around 24,000. So, and to wrap us up, we kind of have this accumulation trending chart, which I featured last week, which is just showing that in this huge dump of coins onto the market, we did see some heavy accumulating, some heavy buying across the cohorts. We got mostly blue, which is, the deep blue is straight accumulating, a little bit of towards the red in the middle, but for the most part, we did see the coins getting dumped into market, getting soaked up. So that kind of leaves us in this place where, was this soaking up, this accumulation enough to mark a bottom, or do we need that one more plunge down towards that 24K area where the realized price is maybe getting down to 20K, where Imran had mentioned, before we can mark our way back up? And that's the on-chain for today.
Okay, so then if we move over to the vol analysis, so obviously the fun started last week, right? So when we spoke on last Tuesday, vols had already started ticking up because of the kind of attempt to break the peg over the weekend, and it all kind of begun. But then it went to a whole new level, right? So short dated Bitcoin and Ethereum vols hit 155 and 180 respectively. So you can see that in these pink lines spiking up. This is like the at the money 7-day vol, ridiculous moves. Then realized also jumping from around 80 to somewhere around that 150 area, 160 above 160 on ETH and around 140 on Bitcoin. And then you look how long implieds managed to stay up, right? About a day, right? Within a day, they're already getting crushed back down from those astronomical levels. And it wasn't like they just retraced 50%. They gave the entire thing back by the weekend, right? Which is just pretty ridiculous, right? And I think it's partly because of these DOV auctions, right? And it just really shows you how much supply hits the street on a regular basis, right? Even when you've had those type of moves, that type of realized vol, the implies just cannot stay up unless the market just keeps on moving like an animal, right? And even with a 10% bounce on Friday, that's decent realized, but that just wasn't enough. And I think we got about 50 point sell off in implies just over Thursday night to Friday morning, which is pretty amazing. Yeah, for people who like sort of getting in front of those DOV flows, normally you make about 5 or 10 vols doing it. This time around, you made 50 vols, right? Which is kind of unprecedented. All right, so that's kind of what's been going on in terms of implied and super short dated implied and realized. If we then look at term structure, should not be a surprise to see what happened to the shape. So you obviously had super inversion, backwardation with those short end, with those 1 week or even a few day options close to 200 vol. But then within 5 days of that peak, you had a complete normalization. I mean, we didn't go into contango, but we pretty much went just to a flat curve, right? So looking out to end of May onwards, it's just pretty much a straight line and a flat curve. So there's a pretty quick normalization of vol and the term structure of vol. And you can see whilst the front was collapsing from like 150 back down to 80, the back end had a good 20 vol point collapse as well, right? It was like from around 90 to 70. And in ETH, it was from like 100 back to 80, something like that, right? So pretty big moves across the curve. We can also see that we look at like rolling out the money vols. And now that Solana has actually been included onto Deribit, which is nice, we can actually include some of the Solana charts to see what vol's doing there, right? So this just kind of shows you the different tenor implied vols over the week. Obviously, we had the big spike. Bitcoin weeklies peaked at 150 vol, Ethereum peaked at 180, Solana peaked at 250 implied vol, right? This is for the 1 week stuff. Now, Solana only has really liquidity in 1 week or 1 month type maturities. It doesn't go as far out as 6 months like the other stuff does. But you can see like even the 6 month Bitcoin and Ethereum options, right? They caught about a 20 vol point bid and they gave it all back, right? So, whereas to move 6 month volatility by 20 vol points is pretty major, right? Like you're going to struggle to move, S&P 6 month vol by that much, right? But cryptos are showing, obviously, whilst the range of volatility goes from say 40, 50 on the low side to 200 on the high side on the short end of the curve, you can see even in the 6 month part of the curve, this thing can move 20 vol points in a week, right? Which is not to be sneezed at. So if you had Vega positions there, they were moving. They were moving. And I did have some, and I luckily did manage to get out of some of them as well, because I felt like a 20 volt point move in the December part of the curve was big enough to take profit on. Yeah. Okay, so that's and then the last point on Solana, right? When things get to ridiculous vol levels like 250, that's when you've got quite nice opportunities if you've got dry powder and these are type of coins that you haven't got a massive position in, then you can just sell naked puts at strike prices that are a level that you're comfortable buying Solana at, right? So that's the type of thing I was doing on Solana on Delta. I haven't got it set up on Deribit yet, but basically on Delta, I was able to sell things like the 30 strike puts in June or the 40 strike puts in May and get paid a really healthy premium because those things were trading above 250 vol, like close to 300 vol. Did the same sort of thing on AVAX, not in monster size, because when you sell puts on this stuff, you've got to make sure you're comfortable taking that delivery. And with these cryptos, you know that they can halve in a week, right? So you just got to size yourself sensibly. But when the vols are that elevated, it's kind of a no-brainer. If you've got dry powder and you don't mind accumulating these things for the longer term, these are great ways to do it, basically, right? So that's kind of what I was doing there. Then you've got skew, right? That was the big signal, right? I mentioned this in the Discord. Someone else actually talked about it first, and then I had a look at it. And I was like, okay, yeah, this is a no-brainer to start selling now. The skew got to levels that we last saw in May last year when China was puking out of crypto. So you can see here, this is the Bitcoin 25 delta skew. If we just sort of home in on the pink and the blues, which are the short dated 1 week, 1 month stuff. I mean, it pretty much got back to those levels, right, that we saw in May. I'd flagged the week before that it had got to around 15, which whilst it was quite extreme, it definitely had room to widen, and then it went and did that basically. So once it got to there, I was like, okay, that's probably about as far as this thing is going to go. Probability of a bounce here, now that we're reaching max panic levels, is high, but that in itself, you can't really use that as a solitary signal. Whilst it does have a pretty good hit rate of helping you find short-term bottoms, you've got to make sure you're checking the price action, right? So I didn't go out and cover all my shorts and monetize all my hedges and stuff as soon as the skew did that. That was just one of the ingredients. And then when you see the Bitcoin go from 25 back to 28, and 28 was that initial kind of support area, that, once you get Tether going back towards its peg, and it's kind of like, okay, maybe the world isn't ending, and the skew's got to extreme levels, that's when you start to, think, okay, I've got enough things now confirming that a bottom might be in the short term, right? So that was the idea. So that should just be one of the ingredients. It shouldn't be the be all and end all, basically. Yeah, but it worked out pretty well as a signal, as I flagged on Real Vision. And then, the last thing, I'm probably looking to re-enter skew positions, maybe risk reversals, things like that, maybe put ratio shorts. If we do eke a bit higher, like above, like I say, that 33K area on Bitcoin, because like I said, I have lightened up quite a lot of my hedges. I don't really have much on in the way of crypto hedges right now. So definitely going to be on the lookout for those if the market does manage to bounce. And then the last thing to talk about is crypto option flows, right? So, really no major surprise in terms of all the flows really concentrated on the put side. You can see that from, these bars on the downside of this, like below the zero axis, they're all puts. So where was the flow concentrated? Well, obviously we had May puts, June and July puts in Bitcoin. Strike prices from 25K all the way down to 15K was the majority of the action. And you can see the flow was skewed 3-1 on the put side. That's where that blue pie chart you see is the majority of the flow. Not often we actually see that. Normally 50-50 to slightly skewed towards calls. So a big change there for obvious reasons. If you look at the flow on Ethereum, whilst we did see a bunch of put flow, a bit more short dated, we did go as far as September, actually. There's a big clip of the 1,000 strike puts on September. But then outside of that, you had a decent clip of June and May in the 1,500 area and kind of on the lead up to that. So decent amount of put volume going through, but we also saw some call volume, right? Which you didn't really see in Bitcoin. So if you look at what you saw on the upside, we saw December, 5,000 calls, 4,000 to 5,000 area trading. We saw March call spreads, March 23, that is 5,000, 5,500 call spread buyers of that. And in decent clips as well, right? That's not particularly small, that size there. So you can see a bit more even, actually more calls being traded than puts on Ethereum, right? So clearly that narrative of Ethereum having the merge later in the year is still intact. People are opportunistically using this sell-off to try and get some longer dated bullish trades on out to December and March, basically, right? Which I don't think is a bad idea. I just don't think there's a rush to do it, right? Because these things will all get cheaper if Ethereum goes lower, and I don't think the sell-off is completely done yet. So I'm happy to be patient and wait, basically, before I pile into bullish longer-term structures. Yeah. Okay, that's pretty much it for crypto. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.